The $1,000,000 question: how do entrepreneurs transition from self-employed to owning a business that turns a profit? My name is Chris Waters, and this podcast has the $1,000,000 answer. Welcome to CEO Secrets. Scott, welcome to CEO Secrets. How you doing, man?
Doing well. How are you?
Dude, I'm impressed. 2 times on the Inc. 5000 list. I mean, top, 167 last year?
Yeah, this year 166, last year 308.
Wow, that's impressive, man. That's no joke. I think my group was at my company was I think 1100 something. So 160 or 166, man. That's impressive.
Yeah, it's one of those things. You can look at the top guy and they're like in the 40,000% growth over 3 years, which is bananas, right? So
when did you start Spartan?
2014, somewhere 2013, we kind of started part-time and then it morphed. So really, man, 2017 was probably the first year that we were really getting after it. So,
Well, let's back up for a second. For people listening in on this right now, tell people a little bit about Spartan Investment, what you guys do, what's your kind of investment thesis, what kind of investors do you take on, what are you buying, what are you investing in? Give everybody a little backstory about the company.
Spartan Investment Group, we're a real estate investment firm. We mainly focus on self-storage right now, and we buy existing assets as well as developing from ground up. We are more of a retail investor shop. We like individuals that want to partner with someone like us that our minimums are $50K, but we have everything from the $50K investor all the way up to 10 million or so. No institutional stuff yet, but that's us.
What was the big catalyst for growth over these past 2 years that put you at the top of that Inc. 500 list?
I think really dialing in our systems and processes. We are 100% organically funded, so we've not taken any outside money. And when that happens, it's a double-edged sword. You reduce risk because you're not beholden to anybody and there's no debt, but at the same time, you grow a little bit slower. So it took us a little bit to kind of generate enough revenue to really kind of go out and get the team. And that's really what's happened. But that period in which it was growing a little bit slower enabled us to build some systems and SOPs and kind of dial in our value proposition such that when we had the team on and really, really went after the market, everything was aligned. And now we're moving really fast.
So explain that to me. You said you've only been growing organically and you don't have outside investors or outside debt holders.
Great question. So we have a lot of investors for our deals, but not for Spartan as a company. So we've not taken any private equity money. We've not taken any VC money for Spartan itself. Each one of our deals is its own entity. So investors invest in a particular property, but not Spartan Investment Group. So all of our operating capital for Spartan Investment Group is generated organically and there's no outside funding for that.
Got it. When it comes to fundraising, what have you guys been doing? I mean, you haven't been around that long. How have you gotten the word out to, raise funds and take down properties?
Multiple modalities, a lot of podcasts. We're featured in a couple of magazines for our industry. We're often writing articles, kind of getting out there, being on stage at conferences, a lot of Facebook, social media adding. So multiple modalities in the marketing arena. And we've generated a list of about 3,500 investors with about 350 to 400 active. So we have a really activated list.
How much do you guys have in their management right now?
At the end of all of the business plans, a lot of these are expansions and lease up. But at the end of the business plan, probably around 325 million or so right now. And we've got another 150 million under contract right now. So
how are you finding deals? It seems like it's mission impossible right now to find a decent deal. You mentioned you're a retail investor. Are you, ultimately paying market value and then finding value add opportunities? Talk to me more about that.
So it's kind of all of the above. As I mentioned before, in regards to our systems and processes, we are very process driven and we do the same thing every single time, which mitigates risk for sellers. A lot of our deals are coming from brokers and they call us first because they know A, exactly what we're looking for. B, that we're a really creative group so that if something doesn't quite fit in the box, if we like it, we'll figure it out. And then C, they know what we're going to do because we have told them what we're going to do, and we do exactly what we say. We do have an off-market campaign. Some of our deals come direct to sellers. So it's really, those are the two modalities. I don't really think there's any silver bullet to finding deals. Deals will find you if the operating environment that you're in knows that you're the person to bring deals to. A lot of folks are out there looking for deals, but they couldn't perform. We're looking at taking down projects anywhere from 60 days as fast as 30, and not cutting corners anywhere. But we have a pretty big team here. We got about 25 folks at our corporate level, and then a bunch of facility managers that help us out. So we're able to move through our processes very quickly and diligently without skipping any steps.
What's the typical yield an investor's getting?
In your mid-teens for the IRR is kind of generally where it is.
Yeah. How long are you guys holding on to these assets?
3 to 5 years, somewhere in there. Some of the business plans are a little bit longer, some are a little bit shorter.
Interesting. And what caused you personally to decide to go into this asset class?
So we were originally started out flipping houses and doing condo conversions, and just really decided that residential wasn't for us. So we wanted to move into commercial. And I'm an Army guy, so there's a process called the military decision-making process, which is a structured framework for making decisions in complex and unfamiliar environments. So I've brought that same methodology into Spartan, and I've taught it to all the non-military folks. And we use that decision-making process to then identify what asset class we wanted. Part of that decision-making is identifying evaluation criteria that is really important to you to assess whatever your different options are. And for us, we wanted something that was very easy to manage, easy to maintain, and easy to evict. So when we look at those three variables, collectively, self-storage is by far the easiest on all of them. Is it the easiest to manage? No, triple net lease is probably the easiest to manage, but pretty hard to evict in triple net lease. Easy to maintain, again, triple net, probably easier to maintain because you just push everything to the owner, depending on your lease. But it was really the eviction part. We have a belief that if we do what we say, we hold up our end of the bargain, you have to hold up yours. And we weren't really interested in moving into an asset class in which a governmental jurisdiction would impact our ability to get paid for our services. You look at the multifamily world, the eviction moratoriums are just now being lifted. It's a long time to be forced to not get paid and not have any repercussions to do it. So that's really where we focused on and why we chose self-storage.
I had a couple questions for you based on everything you just said. What can I Google to learn more about this process you learned in the military?
FM 6-0, Chapter 9.
Holy cow. FM 6-0.
Chapter 9.
Chapter 9. Damn, that's a good number you got there.
I used to teach it. One of my military positions, I'm still an active reservist, and one of my recent positions was going out and training other units in the use of the military decision-making process, and another topic called mission command. It's just a leadership philosophy that the Army has.
Well, first, thank you for your service. That's freaking amazing. Not only are you at the top of the Inc. 500 list, but you're also in the reserve. So who knows? Have you gotten called in anytime recently?
Not recently. I'm in the types of units that don't get called up. More training on the training side of the house. I'm pretty far away from my operational roots.
Yeah. Okay. So I pulled up the PDF. I see it here now. I'm looking forward to diving into that. How does your fund, Spartan, make money? Like, what do you guys trying to make money?
We don't have a fund. We do everything deal by deal.
Okay.
But we make money the same way everybody else does. Upfront fees, expenses that are paid to us for third-party services, such as third-party management and construction management. We have two independent divisions inside of our company that do our property management and our construction management in-house. We just decided that there's too much risk to use those external firms. So we built them in-house. And then we have splits that we get paid on the back end. And the splits are nothing like, we don't standardize our splits. We look at each deal individually and then kind of determine what makes sense based on the projected returns that the market would command for that particular type of deal.
Any kind of average you could throw out there to the audience? Like, is it an 80-20 split, then go to 60-40, start stepping up? What's that look like?
There's really no average. It's okay. Really just all over the place.
Got it. All right, cool. So you're in the military, in the Army, kicking ass, taking names. started Spartan Investment Group. What all happened in between there? Where did you learn what you know now? Was it in the house flipping game? Is that where you picked up?
Definitely not. I learned a lot of what not to do. I started my Army career a little bit late. So I was 27 when I joined.
Okay.
So prior to the Army, I was a regional sales manager for a biotech company. So that really kind of allowed me to kind of cut my teeth on the selling part, on managing a geographic territory. I worked for a small company, so I got exposure to a lot of the leadership and management stuff that was going on because it was just a smaller company. And then I joined the Army, did that for a couple of reasons. One, I wanted to serve my country. Two, some pretty bad stuff happened at the top of that other company with some integrity stuff. And that's really big for me. So I had decided that I wanted to move on from that opportunity to go to someplace else. And then when I was looking for jobs, nothing really appealed to me. So I was just like, you know what? It's time to do this. And I knew I would get really good leadership training and experience in the Army. So I joined the Army. Well, I was on active duty for about 4 years, came off of active duty, and then went into the federal government. And I learned a lot of things in the federal government, a lot of strategic planning, project management, risk management. So all those skills, the leadership from the Army, the sales from the first job, and the various technical competencies from the federal government, I think positioned me pretty well to start Spartan and be able to set the foundation to build the company with my partner, Ryan, that we are now.
Did you have any entrepreneurial endeavors prior to going into the Army?
Not a damn thing. Like it's funny. People ask about, well, what's it really like to be an entrepreneur? I'm not. Ryan is. Our CIO and co-founder is. He had a paper route, sold knives, like lemonade stand, like the whole 9 yards. I didn't do anything. I'm not an entrepreneur. My reason for starting the business really was around not really having great work experience, like from a culture perspective. From my first job, the federal government was horrible. If you are the type of person that wants to be like immersed in that 24/7 all day, then it's a fantastic culture. For me, that wasn't it. And then the company I had before that, the small one, they didn't really focus on culture. It was not a great place to work. I learned a lot, but I really wanted to create a place where people could grow both personally and professionally. And both Ryan and I were completely aligned with that, because Ryan's background was an airline pilot, and both the Army and the airlines, they require a lot of their teams. You're gone a lot. Like the mission at times can be pretty risky. So they really take a whole life approach to the individual. And that's what we do here at Spartan. We want to know our teams personally as much as we do professionally, because if you're a hot mess at home, there's no way you're performing on the job. If the job sucks, there's no way you're performing at home. So to bisect these and differentiate them where they're not connected, it's just a fallacy that organizations pursue that doesn't work.
Can you go a little bit deeper when you mentioned earlier that the key hinge to your growth was systems and processes? Tell me a little bit more about that. Do you have any like interesting case studies or any examples you can give specific to your business where you put something in place and it was just, created rocket ship growth? Like what's a real world specific example?
Yeah, great question. It's our due diligence process is one of them. So we have a due diligence checklist that's 740 items long for every single property that we buy. And we have a specific process of gates that we go through for every deal that we take down. When you've got a small team, 3, 4, 5 people, it's easy to like just talk through it and whatever. When you start to get to 10, 15, 25, 1,000, whatever, that just does not exist. You can't do that. So how you have to really align such that you can leverage a team approach versus an individual approach is through SOPs and processes, right? There's nothing earth-shaking there. We didn't come up with this. It's in every business book that's written. I think that's one of the things, though, is we went after it really early on, very, very early. We were very process-oriented. In fact, we wrote a strategic plan when it was just me and Ryan. And the reason that we did that is like with 2 people, it's easy. But we knew we wanted to grow. And in order to grow, everybody has to be aligned and rowing the boat in one direction. And you can't communicate that enough. So having that strategic plan guided the business to grow. And then our due diligence process allowed us to, here recently, create pods of various team members so that we could go out and do due diligence on a 9-property portfolio in 3 weeks. And we checked off over 6,600 due diligence items across that portfolio. And we were able to do it because of that process. No way we would have been able to do that without it.
Dude, you just created a lot of follow-up questions for me. So you got this crazy checklist, 740 line items. First off, how did you create that? Was it just through a lot of failure? Or did you go and, mastermind or get a coach or somebody else to learn from? Like, where'd that come from?
None of the above. So we have a process inside of Spartan. And again, we're not the creators of all this. We are the collectors of a lot of this different stuff. But most folks have heard of the postmortem or the after action review. A lesser known process is called the premortem. And a premortem is used to run through whatever you're doing. It doesn't matter what it is. You can do a premortem on putting your shoes on in the morning if you wanted to. But it's really about running through and identifying potential points of failure in the future, and then understanding like what could cause those failures and how do you mitigate them up front. So for us, we knew we were new investors. We didn't have experience to fall back on because we had never, like when we started, we had never done self-storage before. It's relatively easy. Most of the time it's a metal building with a door on it. So like if you can walk inside and spin around, you can do due diligence on it. With the exception of some stormwater and some of that, it's a relatively easy thing to do due diligence on. There's some gotchas out there for sure, but it's mostly in the zoning and whatnot. But we knew that we didn't know that. So we did a premortem and we knew that we were going to need a due diligence checklist. So I went out and grabbed every real estate due diligence checklist I could find on the internet. And I collated ours into one of the longer ones out there. I've got some real estate buddies just like we all do. And I asked them for their trackers and what they did for due diligence and just spent a couple of months building the dang thing. But we had it before we even went out. It wasn't 700 when we started. It was in the 500s. And as we brought on more team members and whatnot, we've added to it. We've also taken it away. It actually got up to about 800, and we realized we had some redundancies in there and some things that could be grouped. So we collapsed it down to 740.
So given how extensive your checklist is, I'd have to imagine the top of funnel from a deal evaluation perspective is quite massive. What percentage of deals from top of funnel down to bottom, closed and funded, what does that look like?
Well, so we actually break our process up into two. So we have a feasibility process and we have a due diligence process. They're two different things. And kind of our acquisitions process is the deal comes in, we do a quick and dirty kind of scrub to see if we're really interested in it. If we are, then we do a little bit more deeper dive digitally before we get to LOI. We do an LOI, then we really kind of get out there in the market. And not only do we do your kind of standard feasibility analysis, we also do a lot of engaging with most local jurisdictions from the construction side of the house, because many of our deals are expansions. So by the time we get to contract, we've already done a ton of in-market competitive analysis. We've been to the facility a couple of times. We've engaged with the various jurisdictions there to make sure we can do what we want to do. And we've done a lot of underwriting analysis. So right now, we are 100% contract to close. If we go to contract, we've been able to work through every single issue and go to closing. And it's because we don't put out a contract unless we're pretty darn sure we want the facility. We don't believe in the whole write contracts on everything just to tie it up. We don't feel that that's right. That's not in line with our values. So we only tie up stuff under contract that we really want. And we spend a lot of time, way more than most groups do, up front on the feasibility process to make sure we're doing the right thing.
Where's the opportunity in storage? Is it new construction? Is it expanding existing sites, distressed deals? What's the honeypot?
The answer is yes.
All of the above?
Yeah, there is. Self-storage is a pretty good performing asset. It did really well during the pandemic. It came out on fire after the pandemic. We're seeing about 12% year over year rent growth. There is a little bit of some concern with some oversupply, but it's so micro. Storage is measured in 1, 3, 5 mile rings is the standard. So if you're in a really urban environment, there could be brand new storage a mile away and it might not matter. So because it's based on population density, and once a facility fills up, it doesn't turn over all that much, maybe 2, 3, 4% per year. But the average storage occupancies right now are running in the 90s. And that's actually bad. We don't like to see it up into the high 90s because we have revenue management systems just like the airlines. If you show up with a truck full of nonsense to our gate, it's going to be a much different price for you than if you book online. So we actually want some vacancy there so that we can have that dynamic pricing so that, maybe the standard rate for a 10 by 10 is $100. Well, if we get to where we're down to, 90% or where we're down to 10% vacancy in 10 by 10s, that $100 might go to 150 because we really don't want to go over there. But somebody might really want it. They're like, okay, I'll take it for 150. That's fine. I just need it for a couple of months. I'm all right with that. So you can actually really, really drive your revenue that way, especially because ours is pretty flexible because people are moving in, they're moving out.
So I want to kind of bring things to a close. If I understand you correctly, some of the greatest secrets to your success, standing up at the top betting 500 list, is the leadership training you've been through in the military. You referenced something you used to teach called
Mission Command.
Yep, Mission Command. And I Googled FM 6.0 and pulled up that publication. And that really helped you with developing the processes and systems in your business now. So I guess for the audience, is there any other nuggets or any last little secret, if you will? Not that anything is ever a secret, but when you try to just think about the big bullet points of what really drove the growth this past year, besides those two things, is there anything else on the top of your mind?
I think I was in my mid 30s when I started Spartan, and Ryan was just probably like in his early 30s when we did this. And both of us had a lot of experience before we cut our teeth. I think the other thing, there's a saying that we have: hungry bellies make bad decisions. For the first couple of years of this thing, Ryan and I were working full-time jobs in addition to doing Spartan on the nights and weekends. And the reason that we did that was twofold. For our business, financing is key. Like, we have to be able to get loans from banks. And if you're not really well-heeled, and Ryan and I, neither one of us come from money. We're both, the term is self-made, which that's a BS term as it is, but I'll use it for the notoriety that it has. There was no inheritance. There was none of that. So in order for us to get loans, like, we had pretty good jobs. Like, no bank was going to lend us money if we were unemployed by just being with Spartan and Spartan not having a history. And then also, a lot of folks undercapitalize their business, and they do that because they want to, like, there's this movement where you got to leave your W-2 right now. I personally think that's nonsense, and it sets you up for failure. You just need to work harder until your business can pay all your bills, such that you're not making bad decisions because the mortgage is due and you're $500 short in your bank account to be able to pay it. So you do something stupid, which causes harm to your business. So I think that's probably other than the experience and training that we had when we started this thing, I think keeping our jobs while building this, unpleasant for sure, but it gave us the financial flexibility to only do the things that was in the best interest for the business, and not because we needed a paycheck at the end of the day.
Interesting. So if I'm hearing you right, there's no expedited path to gaining experience. You've got to be patient.
I would say the only caveat to that, and it's a small caveat, if you're taking outside money, if you're taking PE capital or venture capital, they may help you fast track that a little bit, because that, like any good firm will tell you, you've got to pay yourself. You're not going to be rolling around in a McLaren, but they want to make sure that you pay yourself so that you don't make those bad decisions. However, there's a trade-off for that. You generally give up a whole bunch of ownership, where we own all of the business. So,
Scott, to close us out, where can people learn more about how to invest with you and get a double-digit return?
Yeah, so you can go to our website, which is www.spartan-investors.com. And right on the webpage, there's a learn more, so you can learn more, or there's a place for you to sign up to invest, and you'll kind of go through our investor intake process, because we want to learn about what your goals are before we bring you into our investor tribe.
Cool. I'm at the website now.
Awesome.
All right. Hey, thanks so much for being on the show, Scott. You dropped some nuggets, man.
Appreciate it, Chris. Thank you for the invite.
This was super insightful. I wrote down a lot of notes, and I'm looking forward to reading this publication that you referenced, FM 6-0. Military, man, there's so many amazing things that come out of the military. I've had lots of people explain to me the organizational structure of like Alpha Bravo teams, your captains, and how just the organizational structure of the military, and they're trying to keep people alive. So if you can follow a similar process, so no man's left behind in your business, you're bound to achieve success. So anyways, for you guys tuning in for the first time, be sure to hit that subscribe button. If you're looking for any investment, specifically a double-digit return, which, holy cow, that's hard to find right now, go check out Scott's company, and I'll see you guys next time. Bye, everybody.